Simon, thanks for coming in. The overall market is obviously dictated to by what it perceives is going to happen with QE, not necessarily here in the UK, but in the United States. And this report in the Wall Street Journal suggesting that the Fed might not buy, might go a little slower to begin with.
Yeah, I think depending on who you speak to, everybody's got a different opinion. Obviously, as you've just been saying, the GDP figures yesterday talk about further rate rises possibly. We're probably going to see QE2 from the States and possibly even from the UK as well with the BOE minutes. We had some sentence, as you've mentioned, looking at a rate hike and further quantitative easing possibly coming through there. So it looks like it's something that's going to happen, but it's really just a difference of opinion depending on who you speak to at the moment throughout the market.
As far as the individual numbers are concerned, BATs today, I mean, we were talking about dividend payers. Does BATs fall into a class that people want to buy for regular income or not?
I think they're seen as kind of defensive stock that a lot of people do tend to sort of buy and hold. Certainly not so much of a day trader's stock. They seem to be a stock that people will buy and hold for long-term growth. As you've mentioned this morning, they've actually seen increased volumes throughout Asia, but a decrease throughout the rest of the globe. They have had a bit of a better performance than Imperial Tobacco, the big FTSE rival, outperforming Imperial so far this year. So it's a bit of a mixed bag for BATs at the moment, sort of revenues and volumes decreasing, but doing better than some of their rivals.
John, how do you think investors treat the tobacco stocks these days compared to others, sort of steady dividend, sort of low growth environments? Charlie?
I think that there are people out there who, like Neil Woodford, Investco Perpetual, the biggest income manager in the UK, who've held this stock for years and say, look, its record of growing its dividend is extraordinary. So why on earth isn't everyone buying it? And he keeps saying, well, there'll be a catalyst. At some point, there'll be a catalyst for a re-rating of these stocks. It's never really materialised. And I suppose that's for the same reason, really, as the pharmaceutical stocks have never perhaps been re-rated as much as they deserve on the basis of
pharmaceuticals. BATs have, the tobacco companies have had their litigation. Pharmaceutical stocks, of course, have huge worries about generic competition and being able to get the new blockbuster drugs. So, they've got more issues than the tobacco stocks.
Well, they both got these underlying PR problems, if you like, the patent cliff for pharmaceuticals and the fact that we're banning smoking in the West almost for the tobacco stocks. And I think a lot of people would argue that stopped people seeing the fundamental financial strength of the companies. Is there going to be a catalyst to change that? Well, it hasn't happened yet.
Well, I think when you look at BAT, you look at where BAT was in 2001, it was severely undervalued. It was then heavily bought, and the recovery since 2001 has been outstanding. So I think people are probably thinking, well, where's the next BAT, Imperial Tobacco? And I think it is in the pharmaceuticals. If you look at the AstraZeneca and the Glaxo, they are stacked full of cash. They've got fabulous cash flow, very good dividend record, and I think people are probably thinking, well, BAT's had its day, perhaps. Let's go to something similar, a similar scenario to where BAT was 9-10 years ago.
Simon, well, on the one hand, we've got these sort of stocks. On the other hand, of course, there's great trading stocks. Resources have been a terrific trading stock. Is that going to continue?
A mixed bag, again, with whether it's company data at the moment or economic data, there is a mixed bag across the market. We have good data from certain companies and from certain economic data. Then we have bad, that follows into CSR this morning, as you mentioned. Pulling back on the day, they opened around about 275, down about 10%, equaling the year lows. The chief executive talking about a possible maiden dividend for the stock, so I think some bargain hunters have been buying in there and pushed the stock back up because of that factor to around about the 284 level. They've trimmed fourth quarter growth. They said 9 months so far, 222 million revenue. That was just inside the 220 to 235 predicted, and they're talking of I think 170 to 185 for the fourth quarter. So sort of positives and negatives as with the rest of the market at the moment.
Yeah, CSR is one of those sort of. We don't have many tech companies, do we, Charlie, in the UK, in the semiconductor space. So these are the companies that we sort of do need to do, to grow their own.
We need them to work. We need them to produce some exports for us in the UK. But, you know, I think the problem has been that companies like this have been competing in global portfolios against stocks like Taiwan Semiconductor and things over the last decade, and it's been found a bit wanting. You know, there are some great companies doing this in Asia, and perhaps it's been a bit hard to justify that UK exposure there.
Okay, Simon, thank you. Good to see you. Simon Cater, Head of Trading at MB Capital. We'll take a short break. Still to come.